I'll start with you, John, in terms of whether or not the sort of turn of the year can change sentiment, or does the ongoing negativity towards oil continue?
I think it continues for a while, Wilf, until we start to see the production cuts actually be implemented and bite and do what they did earlier in the year, which was to lower the global overhang. For now, there's no place to hide in any of these markets. Oil's being taken down with the stock market and the negative sentiment that's sweeping across really everything. And for now, the downward pressure is going to persist. And I think the bottoming level, you guys are talking about bottoming levels for stocks. The one for oil is down around 42 bucks.
42 bucks. So you say it's still downside ahead, Denton. How much negativity is being reflected in the price of oil about the economy?
Well, I think one of the things you guys touched on earlier was the concerns about global growth. That's a big one right now. The political risk, which was the previous guest, I think, mentioned as well. So you have those things, along with U.S. production at or near record highs. Saudi Arabian production was very high. Russian oil production was really high. So these cuts are probably going to work, but it's going to take some time for them to show up. If you think about the first quarter, you have refinery maintenance going on, so there's not going to be that crude oil demand that might normally be there.
Denton, are there opportunities out here in terms of those that benefit from this fall in the raw price of crude and haven't had to lower their own prices of refined product?
Yeah, so a lot of the refiners with very sophisticated refining systems. Valero comes to mind right away, and then right after that is Marathon. But one thing to remember, if there is any sort of slowdown, there's going to be a loss of exports. And if there is a loss of exports, that could leave them really exposed. The other thing is, because prices have dropped so fast, retail hasn't had a chance to catch up. So you have some public companies like Casey's, BJ's, and Costco that sell retail fuel. And for the fourth quarter, retail margins have been really kind of off the charts.
You mentioned we're at session lows as well. Dow's down 534.
What do you see as the relationship between the stock market and oil right now, John?
Well, these ills that are affecting the stock market, everything from the trade wars, as Bob was talking about a moment ago, and this apparent global slowdown. I mean, all the sentiment measures out there from the various PMIs that are taken around the world are been cratering. Even recently, too, the Empire State Fed and the Philly Fed both had negative surprise prints. So it seems like there's something afoot. So to the extent we're all worried about the economic activity next year, it speaks right to global oil demand, global fuel demand. So that's what's helping to drag things down right now. I'll say on the flip side, though, in terms of geopolitical worries, with General Mattis leaving the administration, the Middle East game board here could look a lot different depending on who President Trump ultimately puts in the spot and how they approach Iran and others.
And John, I was going to ask about geopolitical risks for next year. I mean, you're pointing that out as something that could very quickly, all of a sudden, support oil prices to the upside. Yes,
very much so, Wilf. Look, John Bolton has long wanted to take it to Iran. Certainly, General Mattis was known to be someone opposed to that. Now, Turkey may have a free hand to take it to the Turks as well as Iraq. Nobody wants a Kurdistan except for the Kurds, and there's a lot of northern Iraq oil hanging in the balance that could come under fire, literally and figuratively.
So, Denton, I mean, is it overdone? Energy stocks this year down 25% right now. They're losing another 3% in the market right now. I know they're tracking the fundamental price of oil, but do you see it as an overreaction?
Maybe a little bit, but again, I think the price of oil is a big thing, obviously. And then the refined products, again, the refining margins for diesel in particular and jet fuel have been really solid. It's gasoline that's been a little bit of the albatross, if you will, right now.
John, just to round things off in terms of your forecast, what do you expect this time next year for WTI?
I have to give the benefit of the doubt to OPEC and Russia and the Saudis in particular that they will succeed in draining the overhang again. So we could easily be back up into the $60 to $70 a barrel range by then.